So, in terms of David, from your perspective, if we look at it in 2017, and Michael actually referred to some of the things already. What has happened in 2017? When you look at Bitcoin, it kind of almost just it rose and then it sort of crashed and it kind of just bounced along for a number of years. But in 2017, there's been a material change. What is different from 2017 and all the years before that?
So as you were speaking and Richard was explaining things, I was keeping an eye on the exchange rate to make sure that we were not talking while Bitcoin was crashing and everybody was laughing, right? But no, it isn't. Is it gonna is down as 10%, even more? Possibly. We mentioned exponentials. That is the feature of networks as they expand, and the various interactions between the nodes of those networks are manifold larger than the number of nodes themselves. That is the reason why the growth of the value of a network grows as the square or the cube or more than the number of the nodes participating in the network. So what has been happening, not only in 2017, but in 2011, 2012, 2013 as well, is that the network of Bitcoin users and the types of blockchain applications that drive the adoption of Bitcoin has been broadening and strengthening. It also was the case that as this base got larger and larger, and as the relative resilience and volatility of Bitcoin, respectively, has proven to be very high and progressively lower, some people started to trust Bitcoin more than their own national currency. How many people? In which countries? It is actually possible to establish what national currencies are now less reliable in terms of volatility or in terms of progressively losing value to inflation than Bitcoin. And whether it is Zimbabwe or Venezuela, which are extreme examples, or whether it is the US dollar or the euro, if you are in Greece, and everybody seems to be out to really destroy your personal wealth, more and more people are saying, listen, not everything for sure, but why don't I trust a little bit of what I own to this crazy thing that I don't understand, that a lot of people don't understand, but has apparently staying power. And this staying power means that there are a lot of people that even if Bitcoin were to go during next year to 6,000, losing 50% of its value, or even 3,000, losing from today's valuation 75% of its value, there will be a lot of people ready to buy. And that means that there is an ability of the network to support itself. And from technical point of view, actually, there is an ability of the Bitcoin algorithm to adjust itself to its own valuation, where as more people jump on it, it gets stronger in terms of the process that keeps the networks secure, and the strength rewards the people who keep the network secure. But if it were to get weaker, that activity of keeping the network secure would be made by the very algorithm of Bitcoin easier, so that it wouldn't be abandoned. It wouldn't be like there are in the Midwest abandoned shopping malls that nobody wants to touch ever more, and they are just gonna crumble and disappear, and every possible investment there is gone. there are self-supporting mechanisms in Bitcoin that are incredibly resilient.